After looking at your source documents, which, as you recall, are any checks, invoices, or receipts, we will enter the transactions shown by the source documents in the journal. So this, as you know, is a source document, and it is a deposit slip. This is another type of source document because it shows the change in value of a business. Okay, so this deposit slip was written on August 2nd, 2017 from F. Underwood. It's from his personal checking account to his business account. We don't really care about the personal checking account because it has nothing to do with the business, but what we do care about is this deposit account and the total value, which is $4,250. So when you go to the journal, this template will be posted below, okay? We first need to enter a page number. So the page number cannot be 1. It can only be 1 when you're starting a new business, okay? So let's assume that the business of F. Underwood Consultants is already running. It has been running for quite a while. So the new page number will be 234, okay, for an example. And if you recall, the date on the deposit slip was August 2nd, 2017, okay, right here. So we can go ahead and enter that. And when you're entering a date on your journal template, you want to make sure that the month comes first and then the date. And you also have to make sure that you change the value of the 2017 to your current year. So if it's 2016, you change it to 2016. If it's 2018, you change it to 2018. Like that, okay? And also, another piece of information, when you are entering multiple entries into your journal, which will happen, you don't have to repeat the month over and over again if it's the same. So for example, if it's August 10th, you can just write August 10th like that. You don't have to put in the August there. In fact, it's recommended you don't. Okay, so let's go back to the deposit slip. You know that it's going into their business account and that it's $4,250. So what's happening? We know that the cash is increasing. So we write cash in your accounts. Don't worry about the PR right now. And for debits, because you're debiting your cash, which means you're adding to the value of cash, you put in the value of $4,250. Okay? Okay, what account is crediting though? Because we know that every time you debit a value, you also have to credit it so that the debit and credit value becomes 0. We know this from the previous accounting cycle. So what we do is that we have to figure out what account is crediting. We know that it's going into the business account, so it has to be either drawings or capital, and we know that it has to be $4,250. So from the previous accounting cycle, we know that capital is credited and drawings is debited. Basically, we are crediting or debiting the owner's equity account, okay? So since it has to be a credit now, we credit capital. So it has to be the same exact amount so that both debits and credits total out to 0 at the end. So now we need a brief or short explanation on why there was an increase in $4,250 for the cash. So we can figure out from the source document that the owner added some cash into the business account. So that's all we put in. Owner has deposited money into business account. Sorry, there's 2 C's in there. Okay, and then we can go ahead and wrap the text and put that in the middle so that it looks all nice and flowery, okay? So next, what we have to do is we have to take these entries and post them into the general ledger. Click the links in the description box below or click anywhere on the screen to learn how to do this.